Here's another one you hear all the time. It's $3. How much can I lose? I've had people call me up saying, I'm thinking of buying this stock at $3. How much can I lose? Well, again, you may need a piece of paper for this, but if you put if you put $20,000 in a stock at 50, or your neighbor put $20,000 at 50 into the stock, and you put $20,000 in at 3, and it goes to 0, you lose exactly the same amount of money. Everything. And people say it's free. How much can I lose? Well, if you put $1 million on it, you can lose $1 million. Just the fact that stock, this may be a reason to research a stock. The fact that stock is 3 down from 100 doesn't mean you should buy it. And in fact, short sellers, people that really make money in stocks, they don't short Walmart, they don't short Home Depot, they don't short the great companies, Johnson & Johnson. They short stocks down from 80 to 7. They'd like to have shorted it at 16 or 22, but they figured out at 7 that this company is going to go to 0. They just haven't blown taps on this thing yet. It's going to 0. And they're selling it short at 7, they're selling it short at 6, at 5, at 4, at 3, at 2, at 1 1/4. And you know to sell something short, you need a buyer. Somebody has to buy the damn thing. And you wonder, who's buying this thing? It's these people saying it's 3. How much lower can it go? You know, now, here's a subject that you probably all talked about. The important thing is you can't get too attached to a stock. You have to understand there's a company behind it. You can't treat this like your grandchildren. No, you have to deal with the stock and say, I understand the company, and if it deteriorates, if the fundamentals slip, you have to say goodbye to it. If one rule you want to remember is the stock does not know you own it. This is a breakthrough. So don't get, you have to understand it and say they're doing well, and as long as they keep doing well, my best stocks have been my 5th, 6th, 7th year I own them, not my 5th, 6th, 7th day. So you have to understand that and stay with it. And then avoid long shots. I bought about 30 long shots in my life. I've never broken even on one. The ones that are really bad are what we call whisper stocks. And if Arthur Levitt was here, I'd appreciate these stories. But these are the times that somebody calls you up and say, hi, Peter, how's Carolyn, how are the kids? And I'd like to talk to you about international blivet. And what they have in this company is very good about the earnings. Earnings going to be very, they're going to be big, small. $3. And they keep whispering. They say, what are you talking about? I don't understand it. And these are, now, either they're so surrounded by people that are going to run out and buy this stock because it's so exciting, or they think the SEC is listening in. They'll get a shorter term. They'll get 6 months in the camp rather than 2 years in the camp. But whisper stocks don't work. And then I want to conclude with there's always something to worry about. If you own stocks, there's always something to worry about. You can't get away from it. What happens in the 50s, people were worried about, the only reason we got out of the Depression was World War II. We got another recession. In the early 50s, they said we're going to go right back into a depression. People worried about a depression in the 50s, and they worried about nuclear war. I mean, back then, the little warheads they had then, they couldn't blow up McLean, West Virginia, or McLean, Virginia, or Charlestown. Now, all these countries that end in STAN, there's 9 of these STAN countries that have come out of Russia. They all have enough warheads to blow the world up, and no one worries about it. When I was a kid, people were building fallout shelters, and we used to have this civil defense drill. Remember this one in high school? You get under your desk. I never thought even then that was a particularly good thing to do. They'd blow us, somebody put in a hat, we'd all get under our desk, But in the 50s, people wouldn't buy stocks, except for the 80s. The 50s was the best decade this century of the stock market. And people wouldn't buy stocks in the 50s because they're worried about nuclear war and they're worried about this depression. Then people, remember when oil went from 4 to 40 and it was going to go to 100 and we're going to have a depression? Remember that one? Well, about 3 years later, the same experts, now higher paid, oil's now at 10, and they said it was going to go to 4 and we're going to have a depression. And then the Japanese, remember how the Japanese were going to own the world? Remember that one? And that we're going to have a depression? And then about 2 years later, we're all worried about Japan collapsing. And this is the most absurd thing I've ever heard. There's a company with a 20% savings rate, incredible workforce, incredible productivity, and people are saying we're going to have a depression because Japan's going to collapse. And they had, on their prayer list, they loaded Mother Teresa and crippled children, and they were praying for Japan at night. It's unbelievable. I mean, the LDC debt. Remember the LDC debt? Remember that one? All these countries, all Chase had lent their net worth to Brazil, Chile, Peru, and all these other countries, and so and all the other countries. And LD said they were not going to pay it back, and we're going to have a depression. It always ends and we're going to have a depression. Or the Great Depression. We're going to have the Great Depression. I never could understand that adjective in front of depression, but it's the Great Depression, or the big one. The big one's coming. But all these countries, and now I understand, these are called the Then they were called less developed countries. Now, we used to call them underdeveloped countries. Those are all wrong terms. Those are not politically correct. You have to call these emerging countries. You can't use less developed or underdeveloped because that's... In fact, the other day I heard the politically correct term for somebody that's overweight is laterally challenged. That's So there's always something to worry about, and the key organ in your body in the stock market is your stomach. It's not the brain. If you can add 8 and 8 and get reasonably close to 16, that's the only level of math you need to know. You don't know to need the area under the curve. Remember that quadratic equation and an integral calculus and the area under the curve? I mean, whoever kid was under the damn curve. I mean, but you had to study this. You don't need this in the stock market. So all you have to know is you're going to see it's always going to be scary. There's going to be always something to worry about. And you just have to forget all about it. Cut it all out and own good companies or own turnarounds. Study them and you'll do well.